Hey there. Today we're going to talk about an investing topic. This is the first investment related video on my life coaching channel. And this topic is going to be related to specifically stock market investing. Why am I talking about investing? Why am I talking about money? Two reasons. I like money, and anybody who told you that money can't buy happiness is only partially right. You can't completely buy happiness, but you can buy a lot of fun stuff with money. Really, the main reason is that financial issues are one of the major causes of stress and causes of divorce. So if we can work on building a strong financial base for our lives and ourselves and our relationships, then theoretically life will be good. So taking care of the money stress is one way to help take care of something that's a stressor for a lot of people and a lot of relationships. So this evening you have Bo, we have some bourbon, we got a board. I got the green marker because green is the color of money. So let's get going. The topic that I want to discuss today is called dollar cost averaging. It's a super simple concept. Some of you might have heard of it before, but basically what it means is that by dollar cost averaging, so routinely investing in the stock market over a period of time, whether it be monthly, bi-monthly, quarterly. So a lot of military people, you guys do the TSP. So in a sense, by doing TSP, you are already dollar cost averaging. So setting a like periodic investment into a stock market fund or stocks or whatever it is that you want to do, but just routinely investing. And why is dollar cost averaging so important? So here is a made up 2-year chart of the S&P 500. So S&P 500, 500 largest companies in the stock market. This is just a fictitious chart. Why is dollar cost averaging so important? Because if you look at a chart over the short run, there's going to be a lot of ups and downs and zigs and zags. But if you are dollar cost averaging, then you're going to buy here, 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 you're going to buy in this dip, you're going to buy on the way up. Too many people try and get cute with their investing and try to time the stock market. I was talking to a young airman recently, and he was talking about, yeah, I pulled my money out of the market because, you know, things are kind of frothy right now and there's a lot of uncertainty about the market in the near term. Granted, if you have like short-term plans for your money, then maybe that makes sense. But if you're investing for the long term, say in a retirement account or money that you're planning on just putting away for a long time, my question to him and my question to you would be, who the fuck cares what the market does in the short run? Because you need to have a long-term mindset if you're investing. If you have a short-term mindset and you're investing, you should talk to a financial professional because investing for the short run is risky. It's hard to predict what returns are going to look like in the short run. But long run, dollar cost averaging, buying periodic is going to allow you to buy everywhere on this chart. And theoretically, by dollar cost averaging, you're going to get the market rate of return over a long period of time. We'll take a look at the other side of the chart here after I have a sip of bourbon. So cheers to whoever's hanging out at home and drinking. So this is another fictitious chart, but the takeaway I want you to see here is that over short periods of time, you're going to have dips in the stock market. Like this would be something like a recession that you might have seen in like 2008 or the dot-com crash in 2000, right? So short term, a lot of fluctuations, but if you draw a line for the long term, what you're going to see is that the market has an upward trajectory. So trying to time the market in the short run is very difficult to do, but if you keep a long-term approach to your investing, then you can predict that you will get the market rate of return over a long period of time. So why dollar cost average? Because we want that market rate of return. Historically, the S&P 500 has returned 7 to 10% annually over a stretch of 15 to 20 years. So, and that's compounding. So the beauty of that is in a 20-year period, by dollar cost averaging, I can expect that the market's going to double 2 to 3 times in that period. So money that I put in at year 0 here is going to go somewhere between 100 to potentially 500-600% returns in that 20-year period of time. So that's why dollar cost averaging is so powerful. And those gains are going to compound on top of themselves. So let's say the market like triples up in that time period. It's up 300%. So it's not just that your returns are going to be 3x'd. So you're 100%, you double up, and then it doubles up again. So let's say you invested $1,000. The first double up, you have 2,000. Second time the market doubles up, you have 4,000. And not to mention that if you're dollar cost averaging along the way, you're going to have compounding returns on those investments. So that's the beauty and the power of investing periodically over a long period of time, having a set it and forget it type of mindset to investing. How to dollar cost average? So for most investors, For most investors, the most simple way to dollar cost average effectively is through using index funds, so low cost funds, whether it's mutual funds or ETFs that track the major indices, like the S&P 500 or the NASDAQ or the Dow. So those are the major 3 stock indexes in the United States stock market. So by picking a low cost, low expense index fund, mutual fund, or ETF and investing into those periodically, a lot of brokers such as Robinhood, which is a popular retail broker, or like the bigger ones like Fidelity or Vanguard, they will allow you to set up periodic investments which will automatically come out of your bank account. So do a little research on dollar cost averaging. Hit me up if this topic doesn't make a lot of sense. It's pretty straightforward, but I really want to demystify investing and the tenets of investing and the components of investing, so that whether it's young people or just people who never got into the stock market can do so with some confidence, and they can go in at least knowing or feeling like they know a little bit, enough to be dangerous, as I always like to say. So dollar cost averaging, super simple concept, but also super important to understand and implement over a long-term period with investing. If you have questions on this topic, please put it in the comments below. If you're interested in some one-on-one life coaching, shoot me an email, or you can also just email me questions. Hope this was informative for you. I look forward to more investment-related topics in the future. I'm also going to hit on real estate and different real estate investing topics as well. So look forward to your comments and look forward to hearing from you, and I will catch you next time. See you.